Hi, welcome to this video, Dave, which is all about Forex trading losses and specifically about letting losses get too big. Now, a lot of traders let losses get too big. They know they should not be holding that loss, but they still do it, okay? Now, it's easy to say, run your profits and cut your losses, but when the cognitive biases within your brain come into play, the temptation is huge. You've got to overcome the temptation to run losses, and that's what this video is all about. I'm going to outline all the cognitive biases that come into play and simple rules to overcome them. Now, in terms of, if you read up on the great traders, many of them will actually say it was a devastating loss they took that turned their trading around and made them profitable. I can certainly say that for me. I nearly lost $250,000 on one trade. Okay, now in terms of the loss, I'm going to go through it, all the cognitive biases that came into play when I was in the loss. Okay, and when it got bigger and bigger and bigger, I just couldn't take it. Okay, and of course the rules to overcome the problems of running losses. Now, in relation to running losses, there's a fantastic film called Rogue Trader. Many of you might have seen it. If you haven't, go and watch it. It's about Nick Leeson, who collapsed Barings Bank, and it really is a fantastic depiction of what it is like to be trapped in a trading loss, and it is psychologically devastating. For me, caused me health issues at the time. It collapsed my business. It was a horrible time, but I learned a lot from the loss. Now, what I'm going to do is I'm going to just going to show you a very quick clip from the film Rogue Trader, which is very relevant to what we're going to talk about. It's only about 45 seconds long or so. Then we'll be back to discuss in more detail.
All right, as long as we balance the books by the end of the month. Gamble. That's all the market is. One giant casino.
These losses are getting out of control.
What's bothering me is where you got all the money to actually pay us, okay, in the first place.
I've got an unauthorised position.
They want to check on these numbers, iron out these funding problems once and for all.
I, Nicholas Leeson, have lost 50 million quid in one day!
Welcome back after that short intro clip. Now, in terms of Nick Leeson, I think this is a great depiction of how a loss becomes all-consuming. You know, if you're taking a big loss or you're in a big loss, it just takes over your life. Now, my loss was not as big as Nick Leeson's, of course, but it was big relative to me. $249,000 on one trade. Now, I knew that I should not be running that loss. I even knew when I was in the loss it probably was not going to end well, which it didn't. Okay. Now, in terms of the story of the loss, I'm just going to go through it. I'm also going to be making references to one of the best books ever written on trading, which is called What I Learnt Losing $1 Million by Jim Paul and Brendan Moynihan. You should go and read that book. It's a fantastic book on the psychology of traders and why they let losses run. Now, in relation to the lessons that I learnt from my loss, they might sound a bit surprising when I come to them. But I think if you keep the lessons that I'm going to sort of outline in mind, you'll never, ever fear taking a loss. You'll take them cheerfully and you'll see Forex trading in a completely different way. So let's go to a storyboard and discuss the rather painful loss in a little bit more detail. All right, let's go through my biggest ever trading mistake, and just want to go through obviously the biases that came into play and some lessons from it, which I think if you keep them in mind, they won't just help you avoid, you know, a big trading loss. They will help just generally in, you know, getting consistency in your trading and trading in the right way. Okay, now in terms of the background, yeah, I was managing a fund. It was only a small fund, about 650,000. It was raised mostly from people who traded with my company. Now, I'm already out of my depth. I've never managed a fund before, so outside of the comfort zone. It's very different managing a fund, trading your own account. You have to have, you know, different kind of money management. You feel kind of more responsible. You've got to answer to other people. Various other things come into play, which I won't go through them all now, but just take it I was outside of my comfort zone. Now, in terms of the initial mistake, the loss is significant but not too big. Should I close it? Now, what I did have was a trade on which was short natural gas. It wasn't in currency, so it was in natural gas. Anyone who's ever traded knows how volatile it is, often being called the graveyard of speculators. Now, I'm short natural gas, or I took the short trade, and immediately there's news that a hurricane is coming towards the Gulf of Mexico. That's obviously going to disrupt rig activity, and natural gas kind of spiked up and then it stalled. And I actually thought, you know what, that is probably in the price. Okay, it's basically factored in. But this is a Friday. It's a Friday evening. There's going to be 2 days when the markets are closed. Now, I should have closed it out because anything can happen over the weekend. The hurricane can get worse, etc. But no, I decided, it's one of the first trades I've done in the fund. It's not too significant a loss. I may as well just aim for break even, see how things go. Now, obviously, when you aim for break even, and a lot of traders do this, they're not convinced it's going to get back to break even, because you wouldn't be holding for that, would you? You'd be holding for it to go into profit. This is just the bias of anchoring. We always want to get back to even. Okay, even if we don't think it's going to happen. I think that is how I felt. Okay, so anchored to the open trade price. Now you do have loss aversion or sunk cost fallacy coming into play here as well, which is a loss isn't a loss, is it? Until it's banked. That's what the traders think. But of course it's a loss. It's sitting there in your open equity. You should never, ever not see an open loss as not a loss. But that's what traders do. Okay? And I did it. Now, in terms of point number 3, mental inertia. It actually takes more to change an opinion than to keep it. Okay? And that's just true in life generally, not just in trading. Okay? You've got to make a real effort to change your opinion, whereas keeping the opinion is just easier. Okay? And that's what I'm doing. I'm suffering from mental inertia. I'm not making any effort to change my opinion. Now, if I'd have thought about the risks involved over the weekend, I'm not totally convinced about the trade, I should change the opinion and close the trade, but I didn't. Now, as you can probably gather, things did get a little bit worse over the weekend. The hurricane was, whatever it is they call it, upgraded, and the market spikes up on the Monday. Now, the loss is becoming big, and it's becoming worrying, okay? It's kind of at a level where I just want something out of this trade, even if it's just a lesser loss, and I'm just subject to confirmation bias. I will be right eventually. What can I find to confirm that my view is correct, despite the fact that more bullish fundamentals have come in for gas? It's spiked up, sentiment is bullish of gas. I want something that can comfort me with my trade. I found various bits of info that kind of comforted me, even if deep down I knew that they weren't that great a confirmation. But that's very common as well. When you're trading, you must always look at the other side of the argument. And confirmation bias is one of the major reasons why traders stick with losing trades. Not just catastrophic ones, but trades, they stick with them too long. They just want to prove themselves right, seeking out opinions of others or whatever, okay? Then the loss becomes bigger and all-consuming, and the stress levels really elevate. Now, in terms of Nick Leasing seen being physically ill in the toilet, that happened to me. My skin came out in a rash. I couldn't sleep. I didn't want to eat. Drunk too much. It's just all-consuming. It's just, you can't get away from it, okay? And of course, it just gets you just so totally stressed out. And I did read an interview with Michael Marcus, one of the great traders of all time. And he had a big loss, and it was all consuming for him. He got off the train and he just collapsed out of stress and was unconscious. That is what it can do to you. It's not just in your mind, it's in your body. It's just all consuming. It kind of consumes your being, and you feel kind of helpless and lost and out of control, which you are. Now, in terms of the next thing I've written, I can't get out of the market, I'm losing too much. I'd felt that way for a little while. I just want something. I need it to turn around. I can't take this loss. Then I got the inevitable end. And the inevitable end came where I had to take the loss. Okay? And I knew it was coming. I shouldn't have hung on for the inevitable end. I was just hoping for the best. But the irony is, and this happens to lots of traders, even in smaller losses, as soon as you come out of the market, what does the market do? It turns around in your favour. A few days later, it turned around in my favour if I'd have still been in the trade, and I would have got the loss back and more. Okay, but that's not the way things work in life, is it? Now, in terms of actually getting out of the trade, I kind of felt like relief, but I also felt kind of euphoric, if that makes sense, because just all the stress has gone, everything you're feeling has gone, it's come to an end, that's it, It was actually, although it was very painful because it cost me so much money, because it was a fund actually, what I did, and I felt so responsible, is I drained the reserves of my personal reserves from the company, stuck it in the fund, and then what I did to make up the rest of the loss was I basically just sold the company. I could sell the client base on, so got rid of the company. And from my perspective, I was not using the money management parameters I should have done, obviously. So it's my responsibility. So basically, I ended up taking the loss. So the company went. I wasn't too bothered about it. I was really annoyed with trading at the time, just so fed up with it. And that was that. Never ever got involved in broking, trading money for other people ever again. And I did come back obviously to do trading. It is not do trading, but be involved in trading. But that was really providing research, which I love doing. And also I obviously teach, which I like doing as well. Now, in terms of point number 8, this should be pretty obvious actually from what I've said. You never want to fall too far behind, okay? The further you fall behind, the harder it is to get back, okay? And you've got to have a stop. And that is the exit point in the market. It must never, ever be mental, okay? Most people want to run mental stops because they don't actually want to place stops. It's got to be there. It's got to be in the market. And basically, that is it. Now, in terms of one thing I'd say to anyone trading is, see the money in your account as real money, not an account balance, okay? And this goes for anyone who's trading. And now, I'm not talking about people who are just trading, minuscule amounts which don't really matter. I'm talking about people who are trading, kind of seriously, if that makes sense. Because it's very easy to lose sight that it is actually money, okay? Because my broker said to me, after I'd taken the trading loss, we talked about how stupid I'd been. And he was saying, just think if I was burning, $20,000 a day in front of you, would you have stayed with that trade? Actually, I probably wouldn't. I'm seeing it as real money. And I think you kind of get detached away from it. The broker platform is very much like an online casino platform. We know online casinos don't want you to see it as real money either. That's where you get chips, isn't it? So always see it as real money. And the way I see it now is in terms of tangible things. So if I'm winning a certain amount of money, I think, I could buy X with it or Y. Or if I'm losing money, I equate it to something real. I find that really helpful for me. Now, in terms of Next point, you've got to love risk to trade. There's no question about that. I don't mind risk at all. I always am a firm believer that losses must hurt you a little bit. I mean, you don't want a critical loss like I took, but they must hurt, because that means you're going to take good care of your money, okay? And risk generally, you're not going to get anywhere in life unless you take risks. Risks, yeah, give you experience, good experiences, hopefully, but control is the key. When I left broking, what I did was I went back, I did building, which I'd come from in the past anyway, I'm sure regular viewers know that. I set up a transport company and a computer supply company with my brother at the time. In control of everything I do, you know, work hard, you make money, you feel in control even if you're not doing that well. In the Forex markets, you just sit there as that all-powerful price goes against you. You have no control over it. There's nothing you can do about it. And I think, yeah, that's the horrible feeling I felt when I was in the trade. But you've got to be in control. And the only thing you can control, of course, is yourself. There's nothing you can do about that market price. Now, in terms of D, it does you harm but makes you feel good. Lessons from alcohol. Okay, right. Why do drinkers drink excessively? Because it makes them feel good. They know it's not doing them good, but it makes them feel good. Same with people who smoke, etc., etc. Now, in terms of how does having a big loss in the market make you feel? It makes you feel terrible. Okay, and it's not doing you good either. You're getting nothing out of it. Okay, at least with alcohol, you can say, well, okay, it could be not so healthy, but I enjoy it. There's nothing enjoyable about holding a losing trade, and that comes from where was that point made? Sorry, it was What I Learned Losing $1 Million, Jim Paul. I think that's a really good way of looking at holding losers. Money, the means, not an end. I think a lot of people are consumed with money. That's the be all and end all. It's all about money. It's all about status. It's just got too much importance. And money can actually, if you pursue it too much, you're just going to make yourself miserable. And Jim Paul makes this point as well. Nearly drove him to take his own life. I actually knew someone who did take their own life over trading, gassed themselves in their car. Money should not be elevated to that degree. And actually, if you look at YouTube, it's all about the money. I just think that, money, it's a means to an end. It's going to give you experience if you take risks, yeah? They're not always going to be good, but life is always about experience. But just for me, anyone who comes in the Forex markets just greedy, wanting money, it's going to end in disaster. I'm just going to finish off with a final video clip, which is totally the wrong view about money. And this guy, he was in the film Rogue Trader. He is the type of guy you'd actually like to, you feel like hitting him if you've been through my experience. Anyway, that is the video for today. Thank you very much for watching me as per usual. Take care and have a good day.
Oh, we are going to make so much money. But more to the point, you are going to make so much money.